US Commerce Secretary Howard Lutnick on Tuesday said he expects US economic growth to exceed 5% in the first quarter of 2026, offering an upbeat outlook for the world's largest economy. Lutnick, whose department oversees the Bureau of Economic Analysis that compiles the GDP data, stressed that the projections reflect his own personal view and not the official forecast. Take a look.
I think we're going to grow more than 5% GDP this quarter, and that's for the $30 trillion U.S. economy. And if rates were lower, you would see us hit 6%. What is holding us back is ourselves, okay? We are going to align our economy and our industrial policy with growth and success, and we hope to export that. I hope the UK follows our energy policy, follows our digital policy, so that our great tech companies can invest in the UK, can invest in Canada, can invest in Europe.
Streaming platforms captured nearly half of all US television viewership in December, driven by Netflix's Christmas Day, NFL games, and the final season of Stranger Things, according to data released by Nielsen. The milestone highlights how streaming continues to reshape viewing habits even during peak holiday television periods. Take a look.
Streaming services captured nearly half of all U.S. television viewership in December, powered by Christmas Day, NFL games on Netflix, and its highly anticipated final season of Stranger Things. That's according to a report Tuesday by audience measurement firm Nielsen. In its monthly report, The Gauge, Nielsen said streaming cemented its dominance over broadcast and cable with a record 47.5% of total TV viewing in the U.S. On Christmas Day alone, streaming commanded 54% of all TV viewership, the largest single-day share ever recorded by the industry. Google's YouTube accounted for more than 12.5% of all TV viewing last month, representing the largest audience share for a streaming service. Netflix viewership was up 10% from November, with Stranger Things December's most-watched streaming title. Nielsen said broadcast accounted for roughly 21% of TV viewership in December, while cable had a 20% share. The data reflects the ongoing transformation of the television industry as viewers increasingly gravitate toward on-demand content and live sports migrate to digital platforms. The shift is driving consolidation in the sector, with Netflix bidding nearly $83 billion to acquire Warner Bros. Discovery's studio and streaming assets.
And Netflix has now shifted to an all-cash bid for Warner Bros. Discovery Studios and streaming assets, keeping the offer at $82.7 billion as it looks to block rival takeover efforts by Paramount. The move sharpens the battle for control of one of Hollywood's most powerful content libraries.
Netflix switched to an all-cash offer for Warner Bros. Discovery Studio and streaming assets on Tuesday. But it didn't increase its $82.7 billion bid. The streaming giant wants to beat Paramount's rival efforts to buy the Hollywood giant. According to a regulatory filing, the new all-cash bid, at $27.75 a share, has unanimous support from the HBO owners' board. Both Netflix and Paramount Skydance want Warner Bros. For its leading film and television studios, extensive content library and major franchises. These include Game of Thrones, Harry Potter, and DC Comics superheroes Batman and Superman. Paramount has changed its terms and engaged in an aggressive media campaign to try and convince shareholders its bid is superior. But Warner Bros. Has so far rejected the David Ellison-led company. Shares of Netflix, which is slated to report quarterly earnings after the market close, were up more than 1% before the bell, though they've fallen almost 15% since announcing the merger in early December. The drop was part of Paramount's argument that its bid was superior. Warner Bros. Rejected the Paramount bid, as it argued its all-cash offer was insufficient after factoring in risks, costs and uncertainties.